What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. It's a good Friday, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the latest news and the technical chart patterns from all the major FAANG stocks. Got some really interesting technical chart patterns, so you definitely want to stick around for that. And a lot of interesting news before we get there. Better kick things off like we always do. Meta Platforms. So the week at 502, the social media giant slipping down by about 3.4% to finish the week at 485 and some change. Apple, Google, Meta, that's a mouthful. And the EU is probing the three giants for potential violations under its Digital Markets Act. They are alleging that Alphabet steers people to their Google Play Store. They self-preference things in Google search. Meta has a pay for consent model. Apple is also very similar to Google in the fact that they force you to the App Store. All of those things are true. And if they are a violation under the DMA, well, I tell you what, the country has every right to find these companies and get them to change their business model. Ron DeSantis signs a bill banning social media for kids under 14 in Florida. I can just hear the tears across the country from all the teenagers that are now going to have to maybe get a VPN or figure out a way around this. I tell you what, I know a lot of kids that are in that kind of 14, 15-year-old range. They're smart enough to get around this ban, but it'll be interesting. Starting January 1st, 2025, you are not going to be able to get on social media. They're also going to have age verification on certain sites. So now when you go to a website, you have to click that stupid cookie pop-up. Thanks to all the privacy laws out there, they have to have a pop-up screen on basically every website or something down in the footer or whatever that you have to agree or not agree to. And pretty soon now you're going to have age consent on a lot of these platforms as well. We'll see. I don't know if there's going to be any legal challenges to this, but it'll be interesting. Florida will set the precedent. My guess is other states will follow. Moving on to Apple, start of the week at 169. The iPhone maker up about 0.8% to finish the week at 173. Apple's Vision Pro is going to land in the great country of China later this year, and it will have Tencent's popular apps on the ski goggles that nobody is buying, it seems like. Apple CEO Tim Cook made a visit to Shanghai. He's been there, actually, I think, for about a week now, as he continues to double down on their China facilities, and they opened up a new store in one of the largest cities there. Apple's iPhones continuing to be manufactured kind of on a stable basis, according to data compiled by TD Cowen, but the demand, it doesn't seem like we're seeing increasing demand. We're just seeing kind of normal kind of refresh demand rates, which again, for Apple is not bad. We're talking about tens of billions of dollars in revenue, but what is going to surge the shares higher over the $2.6 trillion valuation? One thing that might do it is on June 10th, when the company has their long-awaited and anticipated developer conference. Last year, they announced those Vision Pro ski goggles. This year at WWDC, they'll probably focus on AI and announce something there, whether they're partnering with Google, maybe they partner with OpenAI, maybe they go it on their own. We'll certainly see what Apple decides to do there. Apple is ramping up for new iPads, those to be unveiled sometime in May. They haven't refreshed the iPad Pro or the iPad Air, I think, in several years. You're going to get a new OLED screen or display on the Pro model, and the iPad Air will get a 12.9-inch screen up from the 10.9-inch screen there. Anybody that has an iPad knows that, man, these things are durable, especially if you don't have a case, they can crack. But you put a heavy-duty case on these things, and man, they last a while. And so we'll see if the refresh brings in some new sales for Apple. Moving on to Amazon, start of the week at 178, 1.2% higher for the e-commerce giant, up to $180 per share. Amazon is making same-day prescriptions available in the great New York City and Los Angeles area, with plans to move to other major metro area markets as well. As you have some of the, quote, traditional pharmacies out there, the Rite Aid, I believe, filed for bankruptcy. Walgreens certainly hasn't had great performance recently. CVS as well. Amazon certainly trying to make inroads in the pharmacy business, and the company believes that the weight loss drugs, these are the Ozempics, Wegovy, and Zepbound. There's other ones, appears that are be coming to the market here really soon. Those are all being supply constrained because they are so wildly profitable and so wildly popular. So many people are getting on these drugs that certainly could boost Amazon. They are advertising that both GLP-1 drugs are available through Amazon Pharmacy, and it's going to bring in, quote, a lot of revenue to Amazon. Now, company is making an extra $2.75 billion investment into Anthropic. They now have a $4 billion investment into Anthropic, which released its Claude model a few weeks ago, which by most tests is at least on par with OpenAI's ChatGPT 4.5, I believe they're on, and in some cases actually outperformance in certain tests. Amazon is doing this largely to make the Anthropic model on Amazon something that other clients can use. It can also use it kind of as an example or a test case, and it keeps Amazon competitive against the Googles and Microsofts, which obviously have very strong not only cloud but AI cloud offerings. Moving on to Netflix, start of the week at 625. Some weakness showing up in Netflix shares as we're about 20 days away from the company reporting earnings early next month. Shares of Netflix down to $607 per share. The company was removed from a best ideal list of Wedbush, mainly because of high expectations. Just over the last year, you've seen shares go from about $320 all the way up to $607. And this is in an industry, a streaming industry or entertainment industry, where you have Disney stock, Paramount stock, other stocks in that sector not performing great. One thing to note about Netflix stock, you're trading about a 35 times forward price to earnings ratio, which for Netflix isn't all that high. Moving on to NVIDIA, start of the week at $942, down 4%. Finished the week at $903 per share. NVIDIA is going to partner with SK Hynix, and they plan to build a $4 billion chip packaging facility in the great state of Indiana. Operations at the site could start as soon as 2028. I think what's kind of funny with a lot, and it's not really funny, but I think what's going to happen with a lot of this chip manufacturing that's moving out here to the United States, you've got a facility, or at least two facilities, I think, that are building in Arizona. You got a facility potentially in Ohio. You've got this facility in Indiana. I think it might coincide a little bit with maybe the peak of the semiconductor industry. Semiconductors is a very cyclical business. You have strong demand cycles, often followed by cycles where the large hyperscalers or maybe even computer makers, they don't need as many chips. And so potentially these sites open up in a down cycle. We'll see if that materializes or if semiconductors can continue to rip higher. Intel and AMD could lose money as China is looking to ban the use of Intel and AMD chips inside of computer chips sold in the country of China. Intel could lose $1.5 billion, which is significant to the company. AMD slightly less, as their market share is slightly less. Moving on to Google, start of the week at 148. The search engine up nearly a point and a half to finish the week. We'll call that 151. Altimeter Capital CEO says the wheels are starting to change over at Alphabet. That's after the embarrassing Gemini rollout. You also have Sergey Brin, who I think is on Google's campuses a couple of times a week. The company realizes they need structural changes as a whole heap of competition is coming at it, not just from the AI segment, but there is some search engine startups that are starting to pop up as well. Google definitely needs to get its act in gear, and given the fact that they're starting to recognize that now, some analysts believe that's a good thing. Google is going to unveil a Chrome browser for ARM-based Windows PCs. If you were still working on a PC that is based on the x86 architecture, your life will completely change when you buy an ARM-based laptop. I tell you what, the power, everything is so much better, and Google capitalizing on that. Now, Pinterest could be testing Google ad partnership in the United States. Right now, I think that Pinterest runs some Bing ads. So some of the ads that get served on Pinterest actually flow through Bing. I only know this because I run advertisements through Bing, and a lot of the referral traffic actually runs through Pinterest. It'd be interesting if Google gets on there, only because Pinterest is very qualified traffic. It actually is very good traffic, and the people that come over do tend to convert onto purchases and things like that. It's high intent traffic. And so if Google can get on there and start serving ads on Pinterest, not only good for Pinterest, but also good for Google. Moving on to Microsoft, start of the week at 423. We'll call that down 0.6%, basically sideways to finish the week at the great number of 420. OpenAI's ChatGPT is seeing an uptick in usage, particularly for work-related activities. More and more people flocking to this. We do have rumors that I think we talked about last week that you should have GPT-5 coming sometime maybe late spring, early summertime. That certainly could potentially give the stock a boost. I'm using OpenAI all the time, at least for suggestions for different types of things. It certainly can summarize things and make things a lot faster, and obviously other people are noticing that as well. Moving on to Tesla, start of the week at 174. The electric car maker had a positive week, up about 0.5% to finish the week at 175. Highly anticipated. The company will be giving their Q1 delivery report at the end of the month. So I think we still got maybe 2 more days until we get this. We should get this early next week, I think. Now, you did have the shutdown of the factory in Berlin, as I think there was like an arson attack there. You also had potentially softer demand in China as you had the Chinese New Year. We'll see how things are going here in the United States. We won't get like granular data on the Cybertruck, but I'm certainly seeing them out in the wild a little bit more often. And those are $100,000 cars, more or less twice the price of their more mass-produced vehicles. So we'll see what happens with Tesla and see how those delivery numbers are digested. Just looking at how the stock has performed year to date and over the last month, the expectations aren't very high. The company did gain earlier in the week after a report. It's in talks with the Italian government officials. Now, another reason it might have popped is actually due to that tragedy of that bridge collapse in Baltimore. My understanding, that was a huge port and a huge place where a lot of cargo and automobiles were shipped into the country. So it could be you just have temporary supply constraints at anybody that was using that port. My guess is Tesla probably used that port a little bit less than everybody else. Now, XAI will enable a chatbot Grok for premium subscribers of X. And I think Elon Musk even expanded on this, that if you have a certain amount of verified followers, you actually get access to it for free. So we'll see what happens there. Now, Tesla is going to require staff to demo full self-driving beta software when customers make deliveries of their beautiful Tesla. Guys, all Tesla has to do with full self-driving is stop thinking they can charge $15,000 or whatever the price tag is. Like, literally nobody can afford that. And by nobody, I mean to move the needle at a company worth $560 billion. What Tesla needs to do is swallow their pride and make it a $49.99 a month thing, otherwise known as maybe $500 to $600 per year. And how many people there's been millions of people that have bought a Tesla over the past several years. How many of them would just say, F it, $49.99, sure, that's not that big of a deal. But $15,000 is a ridiculous price for full self-driving. I don't care if it works flawlessly. There's very few people that can actually afford that or actually even need it. But for $49 per month, yeah, I would buy it. Now, moving over to the technical segment of the show, where we look at beautiful technical patterns, lines and graphs. S&P 500 is still on a massive, steep uptrend. It just continues to churn higher, and until you get some kind of reversal, you have to assume, I guess, it's going to continue to go higher. Now, Meta's in an interesting spot. We did not confirm higher highs more recently. You would have liked to see Meta more recently kind of poke up here to like, call it 520, 530. It did not. It actually got rejected at that level, same level that she got rejected back in early March. So temporary, that looks like kind of the ceiling on the stock. Now you could find some footing down here where the shares are at 480. Complicating the situation is in 26 days, Meta, like a lot of these stocks, is reporting earnings. Do you break down below? If you break down below, you should have support down here at 455. Your balls will be made out of titanium if you buy at that level, because there's a gigantic gap underneath that. When stocks get close to these gaps, they want to fill. We've been saying it for months now, or at least several weeks now. Meta fills that gap. That's your opportunity. Moving on to Apple. It has reached an area of support, at least temporarily. This 170 range is the bottom of a range for Apple. Wouldn't blame anybody saying, well, I'm going to make some short-term money on my Apple shares. Buy some shares here, stop loss at 165, try to play a rebound up into the 180s. If you do get rejected here with Apple, some exciting buying opportunities. Certainly keep you updated on that. Amazon's in a beautiful Beautiful uptrend heading up here to all-time highs. In fact, it looks like a destiny move for Amazon, moving back to the all-time highs. You got earnings on Amazon in 27 days. Looks like to me you're going to want to melt all the way up into that range. Moving on to Netflix, a little bit of a reversal this week, but you're still making higher highs. You're still making higher lows, at least in this shorter term uptrend. And more or less, if you look at kind of the longer term trend as well, nothing to be overly alarmed with. Although if you do break this level, there are levels lower with Netflix. I would just stay hands off on this one. You got 20 days till earnings. I think you just watch it until then. Moving on to NVIDIA, looks like similar to like a lot of these stocks, just have not been able to kind of push back over the highs that we made. Doesn't mean that the uptrend is over. You can have these kind of temporary stall out moments, certainly look like things are breaking down, topping out, and only to have them resume again. For NVIDIA, you wouldn't really want to see shares, especially if you're like holding shares, you wouldn't want to see them get below kind of this 840 level. That would definitely be a break of kind of the breakneck trend, any break of that trend. And with NVIDIA, like all these stocks in this type of uptrend, you're looking for pullbacks. Anything's, I mean, I don't even want to put a number out there because it's almost kind of embarrassing, but anything south of 700 would be, obviously, when the stock is at 900, it's obvious that south of 700 is a buying opportunity. But what you have to understand is it's not if NVIDIA makes that move. It's probably more likely when NVIDIA trades below 700 or around 700. The news is going to be ugly. It's going to be AI is over. The bubble is popped. NVIDIA's best days are behind it. Blah, 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 blah. So you have to make that decision now. So make the decision now. And when the stock makes that move, very similar to Tesla, which we'll look at here in a moment, you're ready to act. Now, moving on to Google. This is looking pretty good, especially if you can get Google to push up just a little bit higher. I mean, this is almost close enough for a higher high. Technical patterns don't have to be perfect, but for it to be perfect, you like to see Google tick up to 155 next week, get rejected. Any rejection in Google should be bought. Speaking of rejection, Microsoft rejected at a very logical space, at least with this purple line. It's not touching a lot of technical pattern points, but we did get rejected with Microsoft, very similar to NVIDIA, 50-cent pullbacks in these stocks. That's kind of a joke, but it's kind of not. Pullbacks in these stocks should be bought. Microsoft's got some support down here at 396. That's the first area where we're like Apple-like concern that we could go lower. Microsoft's is at 396, which is obviously still a ways away, and you're 25 days from earnings on the great software company Microsoft. Now, Tesla has found some footing more recently, bottomed out here at 160, got a little bit of a rebound, but it's really not that big of a deal because in the micro trend is high, lower, high, lower, high. We'll find out next week. It's really that delivery number. Can that surprise Wall Street? Can it appease some fears about Tesla? You push up into here. That's your selling opportunity, at least, again, shorter term with Tesla. If those delivery numbers are ugly and things get worse for Tesla, boy, you are dumping out the bottom on this one, and you have buying opportunities. For this stock, the 160-ish area, 160, 170 area, over the last 3 or 4 years has been a buying opportunity, but only on a shorter term basis, considering shares were sitting at $175 basically 4 years ago. If you buy Tesla shares at 160, I would probably part with at least a few of them if you do find footing here and you push higher. For Tesla to break out of this technical pattern, you actually need quite a move, like back into like the $200, $300 range. Then you maybe can make an argument that the shorter term downtrend is over, but still the sideways momentum in these shares remain. And until it can break out of that, you have to assume it will continue. Folks, that was FAANG Stock Recap Show for Friday, March 29th. We'll be back next week as we are approaching earnings on all of these stocks. Netflix and Tesla happens to be the first to report. We'll certainly be back next week to preview all of that for you. Hopefully you guys have a wonderful Easter weekend. If you got little kids, it's a great time to watch them pick up some eggs. And if not, it's a great weekend to sit around, maybe watch some basketball and some baseball. Hopefully you guys have a great weekend and a safe one. We'll see you again next week, and good luck with your investments.